Hey, good morning, everybody. Today is Tuesday, May 17th, 2016. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Let's get started this morning with our spectrum analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 10 came from exploration and production. That's oil exploration and production. 9 came from application software. Again, more oil, midstream oil and gas. We had 8 stocks in the top 100 most powerful stocks in the most powerful industry groups. 6 precious metals, and rounding out the top 5, we had medical devices, large pharmaceuticals, and real estate investment trusts, all with 5 stocks each in the top 100 most powerful stocks in the most powerful industry groups. We've been seeing a lot of real estate investment trust recently. We've been seeing medical devices, precious metal mining. We've been seeing a little bit of midstream oil and gas. I think that's a good place to be looking for leadership in this market. And we've been seeing oil exploration and production. That also would be a good place to look for leadership. And finally, we've been seeing a lot of application software recently. Let's see what the Russell 2000's up to. After falling below its 200-day moving average on Friday, the Russell 2000 yesterday recaptured that level. We show the 50-day moving average in red. Notice how we recaptured that level. The Russell has been in this little downtrend, this mini downtrend recently. I think the next important level for the Russell will be to recapture this downtrend. We'll see if we can do that today. Right now, the Russell seems to be bracketed by obviously resistance at this mini downtrend. If we were to take that area out, the next significant area of resistance is going to be up here in the 1140 area. We have minor support at the 50-day moving average, and if we were to break below that, down in the 1079 range. See what the NASDAQ Composite's up to. But before we do that, stocks turned sharply higher Monday on bullish trade. Trade was heavier on both the NASDAQ and the S&P 500, giving both a much-needed accumulation day. An accumulation day is any trading session where the S&P 500 or the NASDAQ trades higher on heavier trading volume than the prior day. Accumulation is a sign of professional money managers buying and is bullish. After ominously falling below their 50-day moving averages on Friday, both the S&P 500 and the Russell 2000 easily recaptured that level, which is bullish. The NASDAQ remains below its 50-day line. In spite of Monday's bullish glow, there are still concerns in this market. Distribution's a concern and may foretell further market weakness. The current distribution count is 10 days in the past month for the NASDAQ and 6 days for the S&P. Accordingly, Investors.com's market outlook remains on an uptrend under pressure. Meanwhile, our market timing models are split, with a buy signal on the S&P and a sell signal on the NASDAQ. A buy signal on the S&P indicates that conservative traders can buy, but shouldn't be increasing margin at this point. In fact, we should be off of margin completely. A sell signal on the NASDAQ indicates that aggressive traders should be off margin and can sell short. We should sell any long position that, if sold at current stop levels, would result in a loss. All stops should be at their tightest levels on all positions. Conservative traders may want to hedge their portfolios with contra ETFs, exchange-traded funds. Monday, advancing issues outpaced decliners by better than 3-1. New highs edged new lows. According to our Ramosi ratio, large capitalization stocks bettered small caps and continue to outperform on a 10-day moving average basis. bulls would have preferred to see small caps outperform. Our Ramosi swing timing model, after flashing an oversold signal Friday, is back to indicating a neutral condition in the market. While yesterday was a good day for the bulls, the market continues to struggle for direction. This isn't a safe market for the bulls yet. Our distribution count is uncomfortably high, and our market timing model for the NASDAQ and the Russell 2000 unofficially remain on sell signals. Be careful here and keep your stops at their tightest levels. Okay, yesterday the NASDAQ composite was up 57.78 points or 1.22%. We closed at 47.75. We tested this short-term trend line and failed. The NASDAQ continues to trade below its 50-day moving average. We'd really like to see the NASDAQ recapture that level. If the NASDAQ could recapture the 50-day moving average, all of the indices that we follow would be bullishly above their 50-day moving averages. Trading volume yesterday on the NASDAQ was above the prior day and about average daily. The heavier trading volume on an up day gives us an accumulation day on the NASDAQ. For you followers of William O'Neill, we are in an uptrend under pressure. We've been in an uptrend on the NASDAQ since February 18th, but we have these 10 distribution days in the past month. That's a tremendous amount of distribution, and that's the reason that our uptrend is currently under pressure. Right now the NASDAQ is bracketed by support down here in the 45.06 area. Hopefully we won't get there. With minor resistance at this mini downtrend line, if we were to break above that, our next area of minor resistance would be the 50-day moving average. And if we were to take that out, our next significant area of resistance is going to be up here in the 4900 range. Right now, our market timing model on the NASDAQ is on a sell signal. Let's see what the S&P 500 is up to. Yesterday the S&P was up 20.05 points, or just under 1%. We closed at 2066.66, and we recaptured our 50-day moving average after trading below it on Friday, after closing below it on Friday. Yesterday we balked at this mini downtrend line in the S&P. I'd like to see the S&P take out that trend line and get out of this little mini downtrend. Trading volume on the S&P yesterday was a little bit heavier than the prior day, giving us an accumulation day. The S&P is currently in a uptrend under pressure. We are bracketed by support down here in the 2044 area, mini resistance at this downtrend line, and then more significant resistance up here in the 2116 area. The S&P 500 has stubbornly held on to its buy signal according to our market timing model. Okay, yesterday I promised that we would put together a little bit of a watch list here today. But before we do, just a note. All of the individual stocks that we talk about in our video market reviews are from our universal watch list. To qualify for our universal watch list, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria and continue to satisfy at least 62%. Out of our trading universe of over 7,000 stocks, there are generally only about 50 to 90 stocks that meet these strict criteria and make our universal watch list. These are the only stocks we review in our daily video market review, and for the most part, they're the only stocks that we use in our trading strategies. That noted, the first stock on our watch list, Sabre Corporation, provides end-to-end technology solutions to a broad range of travel suppliers and buyers located around the world. Sabre's been putting in this kind of funky cup and handle base. It's a first stage base with a pivot point in the 2976 area. Yesterday, Sabre pulled back to its 50-day moving average. Hopefully we'll hold in that area. Sabre gets a 72% checklist rating and may be worth taking a look at by both conservative and aggressive traders. Next stock I want to take a look at is HD Supply. HD Supply is a spin-off from Home Depot. HD Supply distributes products for the maintenance and repair, infrastructure and power, and specialty construction markets. The stock has been working on this kind of funky first stage cup and handle base with a pivot point in the 35.51 area. It also pulled back to its 50-day moving average and held. We'll see if we can hold that area and break above the 35.61 area. 35.61. HD Supply gets a 72% checklist rating and would be a wonderful stock for conservative investors to consider here. Dycom Industries provides engineering, construction, maintenance, and installation services for the telecom industry. It's been working on this first stage cup with handle base with a buy point in the 73.18 area. 73.18 area. Gets a 68% checklist rating. This is a first stage base. Dycom is probably worth a look by aggressive investors at this point. Salesforce.com provides on-demand customer relationship management software applications and services to businesses worldwide. Salesforce was one of the very early pioneers in the cloud space. The stock is also working on the same funky cup and handle base that the rest of our stocks have been working on. Salesforce has a pivot point in the 77.82 area. It gets a 64% checklist rating. It's in a first stage base and may be worth a look by both conservative and aggressive traders. Note that yesterday Salesforce traded higher trading volume than any down day in the past 10 trading sessions. That's our definition of a pocket pivot. That may give you an opportunity to get into Salesforce a little bit before the pivot point. That's the last stock on our watch list. Before we go, I want to take a look at two other stocks real quick. The first stock is Installed Building Products. The reason I want to take a look at this is we suggested considering installed business products back here on this gap above the trend line. You can see we traded very heavy volume. Yesterday, we took profits in IBP. We took a 27% profit for aggressive traders. I point this out because every once in a while it's nice to see that one of these trades works. And the last stock that I want to take a look at is Silicon Motion Technologies. Silicon Motion is a Taiwanese developer of microcontrollers, universal serial bus flash drives, card readers, and embedded flash. That's really kind of irrelevant because what we're looking at here is a swing trade. Notice how Silicon Motion has put in this very nice little, very short-term base. Yesterday we traded well above 40% of average daily volume. We broke above the left side of this base, and Silicon Motion can be bought by swing traders here. This is a very short-term trade. Silicon right now is extended from a first stage base, and so this would be just a swing trade. We would buy it here. We would put our stop at the low point of yesterday's trading session, and we'd look for a 10% profit out of Silicon Motion. This is a trade that should be of interest to only the most aggressive of our subscribers. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call. drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate, or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.